Well, Shibani, from the moment we were worrying about Iran blocking the strait, we have the United States suggesting that it is stopping all trade from Iranian ports. The crude prices have gone on an upward trajectory above $100 per barrel, both Brent crude as well as crude oil rising and upwards of 6.5%. Speaking about what the situation was when the situation was normal on a pre-war metric, 20 million barrels per day was traveling from the Strait of Hormuz. About 1/4 of the global energy trade used to travel from this particular route. About 1/5 of the global oil consumption was traveling from this route. About 80 to 84% of the flows to Asia, including China, India, Japan, Korea, was traveling from the Strait of Hormuz. 20% of global LNG supplies and 83% of the share of LNG was traveling from the Strait of Hormuz just to Asia. 16 million tons per year, about 1/3 of the seaborne fertilizer trade was traveling from the Strait of Hormuz. About 30% of global LPG exports were happening from the Strait of Hormuz, and an average 138 to 144 ships per day were transiting from this region, and now they have come down to about 4 to 5 ships. And now, as US is suggesting that no ship will go from this route, this has come down to a halt, complete halt. As low as 4 to 6 ships per day, as I mentioned, a 97% drop in the total shipment. As per EIA estimates, this is less than 10% of the transits happening. In terms of the long-term implications and the implications, in terms of what's happening on the ground, what you're able to understand, export blockade has already led to sanctioning of Iranian oil and goods, with the largest Iranian oil exports, and Iran is legit suffering from this particular blockade. Russia is likely to have an upper hand because China would like to reroute its exports from Iran to Russia, and that Russia and China will be the bigger gainers, while China will lose in the shorter term with this blockade happening from the United States at the moment.
Right.